Hello, this is Vance, and this is Wednesday, February the 8th, 2017. These are the CL trades for today using the slow hand method for price action. Well, what I wanted to do today, and I thought it was a good day for it because today was the oil, the DOE report, and typically on Wednesdays it's a little bit slower and there's a little bit of challenging situations here. I've got up my chart. So I've got the 800-tick chart on the left here. And on the right-hand side, I have what is referred to as the TPO, Time Price Opportunity. It's just a market profile program that I've had for many years. It was a kind of a lifetime warranty or a lifetime guarantee, or pardon me, a lifetime license from a company that I put. So I put this thing up here, and a lot of individuals, when they talk about market profile, they talk about volume profile and so forth. And I was just kind of highlight a couple of things here because I thought this was an interesting day to look at. Now, I don't use market profile for trading per se. The thing is that I don't have these charts up. I mean, I have it as part of my package, a NinjaTrader, but it's just running and I look at it occasionally, but I don't use it for mapping out trades. But it's interesting to see something. In this case, this is called, on the right-hand side here, this is referred to as double print. So what we have in the morning, this E, you can see these different letters, EF to E to P, represents a half hour. The O represents where the price opened. The E represents the first half hour. F is second half hour. G is third half hour. So these are like 30-minute bars here. And then from there, what you'll also see is the volume profile. That's what this is referred to as, a volume profile for the day. And so the highest, the bars to the right are the ones where there's price traded at this particular juncture the most times. So the most prices traded at on these particular bars. And so this is referred to as a double print. You see that there's a bulge at the bottom of the chart for the morning, and then price migrated up right at the right near the report, just after the report, and that's H represents about 10:30 to 11 o'clock. See, price migrated up here, and then it proceeded to trade in a tight range near the top. Now, the reason I'm showing this is that here's this bar here is my 30-tick bar, and I talked about that. And you can see that if you look at remote price traded in this 30-tick area, it moved up through here, 30 ticks, and then it really rotated and started trading up here for 30 ticks for most of the rest of the day. So if you can see these bars here, you can see where price traded mostly in this area. So for instance, let me just write this in. You'll see that in this area here, you can see that most of the trading took place in this area as it corresponds to this bar, these bars right here. And in the morning, up until 10:30, it traded right in this area. Okay. Now, why is that important? Well, when you look at the chart, when you look at the 800-tick chart, on the chart, an 800-tick chart, look at this area. It corresponds with this part on the TPO, or the volume profile composite right here on the right-hand side. And on the top is the same thing is true. Right in this area, these 30 ticks, you can see this area is the same. So the reason I bring this up, and you can see this area where there's not as many trades take place, is where low volume, these are low volume nodes in this area, and you see price migrate up here. What I'm saying is that it really, for me, it doesn't really necessarily, I don't need to have this up as far as profile is concerned to know by looking at the chart where price is trading. And obviously what I like to see is that if I'm looking at going long, I want to buy when I want to buy in weakness, I want to sell in strength. So if I think price is strong here, I want to sell it. And if I think price is weak here, I want to buy, because I expect that if I'm buying in weakness, that means that price is about to turn around and head higher. So that's basically it as far as profile. So I just thought I'd show this so individuals get an idea of why I see. Now, this could be reversed. I mean, the fact of the matter is that this could have traded in the morning and this could have traded in the afternoon. And that would probably give me a different perspective as what to take trades on this particular chart here. So I thought I'd kind of put this up to show individuals that I do have an idea of how profiles work, or how market profile works, and how volume profile works, without having to actually have it actually looking at the tape or looking at the volume itself. I think that is a visual representation, makes it easier for me to execute. Okay, so that's it for that. Okay, so let's talk about the trades. Frankly, there wasn't a lot that was going on. I mean, we had yesterday the American Petroleum Institute published that there was going to be about a 14 million barrel build, and that's what it was yesterday. And as a result, right at 4:30 yesterday, when that notice came out, price of oil unwound by $1.20 right up until it started opening up at 6 o'clock. But you can see that this fall off took place yesterday. Now in the overnight, price started to move its way up. And then by the time the 9 o'clock rolled around, which was right about here, price had really kind of stabilized a bit and was kind of trading within this relatively, I say it wouldn't be an extremely tight range, but it was a relatively tight range, somewhere in the neighborhood of close to 30 ticks. So it was a 30 tick range. I wouldn't say tight, but in this particular case, you see that price didn't appear like it had a lot of weakness. So what I was looking at is that when I first came in here, first of all, price, it peaks up here, is a double top, price trades down. I mean, we had, price kind of formed a bottom in this area. That's what I was looking at, particularly here, and kind of double topped right here. So this is where I thought the range was going to be. Now, this is where price, this is a 1030. So I wasn't really concerned about this, but certainly there's a trade here. You could have taken this. This was in fact, I took this trade right here. A second entry, considered a second entry long. Now, there's a bit of overlap, and it took me out by 1 tick. In fact, I think I entered at 71, and it took me out at 56. Came back, I took a full stop on that one, with the expectation was going higher. And I held through this, and they came back and took me out. But when price, it took me out right here at 56. That's what 56 is, right here. And so it took me out. When price moved up here, I got back in right in this area. And the reason I got back in is because my feeling is that it was just a real kind of a quick overshoot. I saw that there was pretty much stability in this area, and I was expecting price to go to the other side. And in fact, it did make it to there, only 15 ticks, and then from there, that was it. Until I waited after that, as far as the announcement was concerned. Now, you could have taken a short here. It's not a bad setup. It did work its way out. I mean, I was inclined to take it, but the fact of the matter is I was in this trade coming up here. So, I mean, at this, I re-entered at 71, even though I got taken out at 56, and it kind of shot up here and kind of got my first contracts off, and so I was okay with that. There's a reversal thing. I mean, certainly this is second entry short here. What price comes up, well, it would be worthwhile taking had it not been for the fact it's so close to the DOE report. Now, it does grind down, gets down lower now. I was talking to a couple of individuals, and they were actually trading some of this stuff. They were looking at shorts in this area. It's too close to the report. Typically, what happens, I mean, I'm kind of torn with that, and the reason I'm torn with it is because you can get some pretty decent trades. I mean, as long as it's early enough. But I can let me just show you what I mean by that. Is that right at 10 o'clock, like 10 o'clock, you see how price gets tight. Now there was a little bit of a fall off right in this area, but look at this tightness in this range here, and this is from 10 o'clock to 10:30. We're looking at a range of probably less than 15 ticks, and look how tight these bars are. Obviously, everyone's waiting for that number, and at 10:30, and you see when the number comes out there, you cut these wide gyrations here. Now, there's no really way for me to trade this. I have no strategy for this, especially right at the news like this. If I'm in a trade and I've got a large cushion on a runner, let's say 30 ticks, then I may, or more than 25 ticks, I might hold through the news, but that happens so rarely, and so I don't really do that. I don't, and I certainly don't enter any new trades in these areas unless, of course, as it gets closer. I mean, that's why this one here, this short, even though it's not a bad setup, I can't really enter in something like that. It's too close to the number, and certainly, even though this is a decent setup down here, this is like 10 after 10, and you'd be holding through all this stuff. I guess it's worthwhile to kind of look at it, but I don't really feel the need to doing that. So I kind of sit on the sidelines. And you can see, like, as soon as 10 and 30 came out. Now, what was important about the DOE report? First of all, the American Petroleum Institute report came out, said there was going to be a plus a $14 million build in crude oil yesterday. And that's what wound up with that fall off last night at 4:30. That's what caused this big decline. Now, in the overnight, that hasn't changed. And as you can see, that even so my thinking is that the prices have really priced in that drop at this point in time. I mean, it didn't keep falling. in the overnight, and right at 9 o'clock it didn't fall overnight, because remember, everybody knows about the API report yesterday. So price didn't fall. So my idea is that if this isn't if the news comes out at 10:30, and if it's not significantly bad, like if it's not more than they anticipated, let's say they're expecting a build somewhere in the neighborhood of the same thing as the API report. If it comes out to be a $20 million build, then price is probably going to fall off the table. If it's if it's a little bit really right at the number, I don't think it's going to trade down. And if it's somewhat bullish, let's say instead of being $14 million build, it's going to be only an 8 million barrel build, not dollar, 8 million barrel build. That's probably a positive. That's a bullish report. And so what had happened is that when the number came out, it was 13.8 million barrel build, I think, which is a pretty big build. However, when price came out, it shot up here, comes back down, and found support right near this bottom. And as a result, by the time that after 10 rolls around, 10:40, it's worthwhile taking this trade. Price pulls back first time, second time, and I think this is a pretty decent trade. And as you can see, it might not have enough room to get out to this top, and certainly it's an aggressive trade, but look what happened to it. Price takes off. What makes, from here, it moves back up and it gathers back all the loss that it had from here yesterday afternoon. So even the entire loss was taken all the way back in this single move. And so what does that tell you? It tells me that unless that report that came out, the DOE report, was really bad, price was kind of finding a bottom. And that's really what the lesson is there. That was my thoughts anyways. Did it really work out that way? Well, that's why this trade was a positive trade, is because you've been able to take this trade despite the fact that even though it was near the top of this range, did I think price was going to turn over again? I didn't think so. That's why I think this is a good trade at this point in time. Price moves up. Then we have another second entry long right here. Price breaks a trend channel, first entry, second entry long. You see that price, once it breaks the channel, you get two pullbacks in this case. Let me just show you that. And so, from here down to here, you arguably even three pullbacks. We got a pullback down to here, find some support, and you got enough room to get out to the top, right here, and even to this. So you can get in pretty late and still have an opportunity to get up there, and you can see that price moved up to this area. But then it really channeled, spike and channel, started coming back down in the other direction. And so if you're looking at it kind of really... it tightened up right here. So this is a spike in channel. Most of this move was probably taken just after 11 o'clock. Once it got to this area, you probably should be looking at shorts at this point in time. I didn't think it was going to have another rise up there. I think that, and I thought this was a reasonable to go short in these areas. Now, I didn't take these trades, but I mean, the fact of the matter is that you could have, especially when you establish this trend channel down here. And, but even still, by 11:40, price really started to tighten up again. And so you can see this real 15 tick range. You're going to have to really limit in at these bottoms, like limit buy at these bottoms and limit sell at the tops. And I would have been more inclined to sell than to buy, especially with this channel. But really, you had to really be very specific as far as your entries are concerned. So the entries have to be really near the fringes at the tops of this. So if you want to look at the TPO, and again, if you look at that report, you want to sell at the tops of those things. You sell on what was perceived to be strength, and you buy weakness. And so, you can make the argument that you could have taken a couple of these trades here. Like, I mean, if you really have some wherewithal to really take the trades here. And the reason you would take that is because maybe your stop is below these areas in this area, below this. But that's a bit of a stretch. And so, looking at buying at these areas so that you have enough room to kind of get out of these tops, it's really tight. So, I mean, even this bar, I mean, when you kind of get in there to try to squeeze out a couple of ticks out of that, I don't know. Like once, especially on the day of the DOE report, once the news comes out, once things settle out, do you really need to take trades at 12 o'clock? I mean, if you miss this big move, are you in that market trying to sell to try to get another move down to the bottom? I don't think so. I think this is really, I mean, I always look at the market as if we have a big move, one if you rip up or rip down, you have to really take a look at like what price is going to do around those new areas before you make a commitment one way or the other. And the only way you can do that is you take a broader perspective. You take a longer term view. If it doesn't set up really desirably right after these moves take place, there's nothing wrong with waiting. Wait for tomorrow. I mean, it'll present itself tomorrow until you have a better idea. Don't take a trade just because it seems like you should be taking one. That's a big mistake. You exercise some patience. There'll always be another trade coming down. A better setup. So try to take the best setup that you can possibly take, given the circumstance that you're looking at. So I guess that's it that's what I've got for today. Thanks for listening. If you have any questions about some of these things that I've been talking about, hopefully that you're getting more of this as we go through the slow hand method and my descriptions. And if you have any, like I said, if you have any questions and so forth, please let me know. It's at slowhandmethod@gmail.com. This is Vance. Thanks for watching. Bye for now.